The late adopter. Hi guys, how you doing? Welcome to a new Bitcoin video, and isn't this very lovely day today? 1st of 1st, 2022, and Bitcoin is right up now 3.6% in green, and it's pumping really nicely up here. So in this video I'm gonna try to educate you a little bit. I'm gonna show you how did I know, what was I expecting a bounce. This was a Twitter tweet that I posted yesterday. Are you ready for the bounce, 31st December? And I posted right up here. And after I posted, it went a little bit more down and continued going towards the upside. Now it went down all the way up down here, and exactly at this moment up here, that's when it actually turned around. And I'm gonna explain to you why it actually turned around exactly on that moment. So maybe I should have actually waited a little bit, but I was pretty confident that bounce will, come sooner or later. Because what happened over here is some kind of extended levels. So I'm gonna explain to you, just so you know how you can find those kind of levels and what is gonna happen. Now we're also going to talk about what's happening right now, and as you can see here, we are breaking this very important resistance line towards the upside. So we're going to talk about some kind of resistance levels at the upside and stuff like that. So far everything looks nice, so we're going to keep on looking at the nice stuff. So Twitter tweet, are you ready for the bounce? So right up here, what happened actually over here? So basically, let's do it on this chart up here, and we're gonna go to 1 hourly time frame, and we're gonna clean this line a little bit. So what happened is that we started dumping down here on the downside. You can see we started dumping on the downside, and right up here somewhere I posted a tweet that we are ready for some kind of move towards the upside, and this was basically some kind of overextended level on hourly time frame. So this is hourly time frame, and I got a very nice indicator down here. It's called not this one, this is called the TLA overextended indicator. I'm not trying to shield the indicator, I'm just trying to explain to you how this works. You can basically build this indicator by yourself. It's pretty easy. And what you're gonna see here on this move towards downside, look how low down this indicator came. Now this doesn't tell you very much. This indicator is used by looking at previous history and what are some normal moves towards the upside and downside. Now look when we zoom this out a little bit. So this is a little bit zoomed out chart, and if you put down the line down here, what you're gonna notice is that these levels do not get, I mean, you can drop down, you can go sideways, but there are also other reasons why we actually went towards the upside. But these levels always indicate some kind of stoppage in the move towards the downside. Now we also are looking at some kind of other thing, but you can see that these are what we call overextended levels down here. Pretty overextended levels, really huge, because you can see that normal trading range is between 3% up and 3% down. That's a kind of normal trading range away from the moving average, and this over here went all the way down to 3.8, almost 4% towards the downside. So I was thinking, guys, this has to bounce, and not only did it had to bounce because of that we are extended down to 4%, but we are also at some kind of very important support levels that we have been sitting on. So when you get to these overextended levels at the same time when you are sitting on some kind of support, likelihood for the bounce is pretty huge. So now that you know that we are on overextended levels, and before you ask me, hey man, what is this? This is basically 10 moving average. The white line, that's the 10 moving average, and just basically figures out the distance between the price and the moving average. So when the price escapes the moving averages, it often bounces towards the upside. Now I was actually expecting this to go a little bit faster towards the upside. It didn't. It actually kind of went slow, but right now we are breaking that towards the upside, so it's good, nice. So this indicator down here showed me that we are some kind of overextended levels. That's why I said, are you ready for the bounce? Now there are other reasons for that. So let me zoom in a little bit up here on the daily time frame. I'm going to show you down here that this line down here, the line that we've been talking about a lot, down here, and this is support, guys. This is support, and you can see here that we almost broke the support. We technically did break support. It depends on how you draw the line, maybe a little bit like something like this. We broke support, but when you get these overextended levels on the support, you often bounce towards the upside. So you can see the big bounce towards the upside up here, very nice. This is a daily time frame, so technically we are not yet out of the dump. Now of course there are other support lines down here, something like this up here, also sitting on the support. There has been this support line down here where we have been sitting on support. So you can see there is a confluence of support down here. So considering that we are at confluence of support with overextend on the hourlies, I thought at least a bounce towards the upside. 1 hourly overextend levels doesn't mean that much. Like when you see over daily, weekly overextended levels, you know that the bounce is gonna, you know, last for weeks or days towards the upside. Hourly lasts for, you know, 5-6 hours, 10 hours, and it's done, you know. So I wasn't expecting that much, but it was nice moves towards the upside. So we did bounce nicely, and what's happening right now is we are breaking this very important trend line up here for the second time, guys. And breaking something for the second time is really important. So you can see here that we had this trend line up here when we broke on the downside, and we were making some kind of a we said that this is some kind of a inverse head and shoulders pattern, right? We said this is some kind of inverse head and shoulders pattern, and we are based on this pattern, we are expecting some kind of 50,000 levels towards the upside here, because distance up here, the distance towards up here, we calculated that to be around 50,000. That's up here. Now we just went up with that and then crashed us towards the downside. It can happen under normal bullish circumstances. This may be just going towards the upside and something like that. But you know, manipulation, stuff like that. This over here, I think it's pure manipulation, because you can see that they pushed it really hard at a very inconvenient time when you cannot push it that hard because of overextensions, and they pushed as far down as they could to, you know, liquidate everybody, to get everybody out, to, you know, maximize the fear levels. And as soon as we got towards downside, we started going towards the upside. I forgot to mention one thing down here. Why did we stop exactly over here beside being at support? I'm going to show you up here, because this is overly this was overly extended on the 1 hourly time frame. So this candle had to close. Okay, so for this indicator down here, let me just clean it up one more time. So for this indicator, the close down here, you know, this candle had to close all the way down here, because if it just pulled back up towards the upside, this wouldn't have been an overextended move. But you know, closing down here, it is overextended move to make. So if you go to the 5-minute chart up here, what you're gonna notice right up here, when it started going down, that it turned down on the dollar when the clock ticked 9 o'clock. Exactly at 9 o'clock it turned around. And I know exactly it turned around at 9 o'clock because I was looking at 1 second charts, and at this very second we hit 9 o'clock, it turned around and started going towards the upside. So it went a little bit more towards, went down and, you know, bounced, continued to. But the very bottom came exactly at 1 second over 9 o'clock on the 1 hourly close. Let's see if you can see the 1 second chart up here, and we can zoom in. I don't know how long second charts go, so let's see if we can go back enough time and to see if we can get enough data on the second chart. I think we need to go pretty far back. This is 12 o'clock. Yeah, now we're getting there. I should probably stop the video. There is a tweet. There's a tweet somewhere. I don't know where it is. 9, 10. Oh, we gotta go even further back. This is 1st January. Oh, that's far back. That's far back. I'm sorry about video. You know, you can use this time to, you know, hit the like button, hit the subscribe button and stuff like that while I go back in time. You know, there's things you can check down, links below. We gotta see if we can see it. No, yeah, maybe no. It only goes back to 1st January 1 o'clock, so we cannot see. Maybe we can see it on the 5-second chart. Let's try 5-second charts, and maybe you can just press this one up here and then go back in time to 31st. Go. No, it doesn't go back that far. 5-second charts. Maybe this is it. Maybe this. Here we go. There it is. There you go. We can zoom in on 5-second chart, so you can see. You can see exactly. You know, this we can down here. Maybe down here. 55 exactly up here. If you saw the second chart, you will see that exactly on the second we actually reversed the move and started going towards the upside. So you can see that, you know, traders and, you know, people buying and selling, they are waiting for specific moments on the charts to happen to actually, you know, start going up, to start selling, to start buying, and so forth, so forth. Very interesting stuff. Very interesting stuff. And now this inverse head and shoulders here on the 4-hourly time frame, we thought this was gonna go to the you know, 50,000. Unfortunately, it didn't play out, so we don't have any kind of inverse head and shoulders right now. Somebody asked me, man, is this you know, some kind of head and shoulders? It cannot be head and shoulders because this right shoulder goes way past the head, and that's not the way, you know, head and shoulders plays out. Now the good thing up here because we broke the trend line, and this trend line is very important. We broke the trend line one time, right back down again, manipulation, and this is the second time breaking the trend line towards the upside. Super nice move towards the upside. You can also see the 10 and 20 moving average. We went above 10 and 20 moving average, right down, right back up again, you know, confirming the support, and bounce off of that towards right now. So I'm very bullish right now. Right now Bitcoin is still up 3.8% towards the upside, and it can just continue going towards the upside. On the daily time frame, you can see that we are not exactly out of the dump yet. Now it is nice move on the 4-hourly time frame, it is nice move on the hourly time frame, but you know, bigger time frames, long-term technical analysis is still saying, hey man, you're still below 10 and 20 moving average. Chill a little bit, you know, you gotta do a nice move up here, you know, to confirm some kind of bullishness. We did break this downtrend down here. We definitely did break the downtrend. You can see the line up here, it's pretty nicely broken. That's pretty nice, though. You can also say maybe if you pulled up something up this up here, maybe someplace down here, I don't know. Maybe someplace up here, doesn't matter. You can see that this downtrend was broken. We went down again, you know. Now we can actually continue maybe some kind of sideways move, maybe some kind of upwards move, something like that. But we are still not to the dump, and this might, you know, indicate on a longer term chart that this is some kind of double bottom. Now if this is some kind of double bottom pattern, what has to happen for us to actually, you know, become super bullish? And that is, you know, by looking at technical analysis and stuff like that, you know, what is double bottom and stuff like that, technically you gotta get it back above this level up here. So this was first move towards the upside. We create some kind of higher high up here. That's nice. What has to happen right now to confirm this double bottom is we have to move above this line up here, and once we do that, we got technically some kind of a double bottom up here. So this is, you know, around 50,000, 50,800, something like that. That's a very important level to break, but right now, you know, I would be just happy getting above the 10 and 20 moving average up here, you know, just slowly cruising towards the upside, you know, eventually, you know, breaking this towards the upside. I'm still very much bullish. I haven't looked, I mean, let's see where the 50 moving average on the weekly, what day is it today? Today is actually Saturday, so we only have 2 days left. Let's see the 50 moving average. You can see that we are still below the 50 moving average. So on the weekly time frame, we are still not out of the dump. This 50 moving average, we crossed it below, right back up again, right now below it. So it's gonna be very exciting tomorrow's close on Sunday. How we close? Do we close above or below the 50 moving average? That's somewhere around 48,100, give or take. So that's what I'm hoping for the next couple of days. I'm not actually hoping for some kind of 58,000 levels up here or something like that. It would be nice and stuff like that. I'm just hoping, like, hey man, just at least get above the 50 moving average and stay up there. Because if we fail that, if we close below the 50 moving average, we might see more movements towards the downside. Because you know, it is rarely that, you know, you hold the support and then you know hold support for a second above very important level of support. But you know, it can happen that we just turn around and go back up again. But you know, it is kind of scary. It is kind of scary closing again below the 50 moving average. Now if we do that, we're still gonna, you know, keep on continuing looking for some kind of, you know, reversal patterns, some kind of support holding and stuff like that, right? Anyways guys, that's it for today. I hope you enjoyed the video. Hit the like button on the way out, you know. See you around guys. Bye bye.
That was genius. Thank you. Great job. You guys did it. No, it's you.